The Federal Reserve did not budge. Though there was some disagreement, policymakers decided not to raise interest rates. But the central bank did say a few important things: that near-term risks to the economy were more balanced, it signaled a possible rate hike this year, and it lowered its outlook for long-term interest rates. And with that, stocks took off. The Dow Jones Industrial Average climbed 163 points to 18,293. The Nasdaq added 53, and the S&P 500 rose 23. Hampton Pearson has more on the central bank's decision and what Janet Yellen signaled to investors.
Fed Chair Janet Yellen and fellow monetary policymakers say it's not yet time to raise key short-term interest rates. Business investment remains soft, inflation is too low, and there is still room for further improvement in the labor market.
Most of us judge that the case for an immediate increase in the federal funds rate is stronger, but that it would be sensible, given the finding of a bit more running room, to wait to see some continued progress, evidence that we continue to progress toward our objectives.
The Fed is lowering its forecast for growth for the next 3 years, just 2% for 2017 and 2018, falling to 1.8% by 2019. But there were 3 dissents. Regional Fed Bank presidents Esther George of Kansas City, Loretta Mester from Cleveland, and Eric Rosengren of Boston all wanted to raise rates today. And the majority of the central bank officials now expect a rate hike before the end of the year.
Most participants do expect that one increase in the federal funds rate will be appropriate this year, and I would expect to see that if we continue on the current course of labor market improvement and there are no major new risks that develop, and we simply stay on the current course.
The Fed's next meeting comes just 1 week before the November elections, with the Fed chair dismissing statements from Republican presidential nominee Donald Trump that policymakers are playing politics with interest rate decisions.
I can say emphatically that partisan politics plays no role in our decisions about the appropriate stance of monetary policy. We are trying to decide what the best policy is to foster price stability and maximum employment, and to manage the variety of risks that we see as affecting the outlook.
When asked specifically about the possibility of a November increase just 1 week before the election, the Fed chair repeated her standard response that every Fed meeting is live. For Nightly Business Report, I'm Hampton Pearson in Washington.